Hi, this is Paul from globaltradingsoftware.com, and this is a Forex trading tutorial. So we're going to be looking at behavior, understanding that behavior and framing those charts very simply. So if you're day trading GBPUSD in this case, we really just need to be looking at the 15-minute time frame and looking at the confluences. So where support and resistance zones touch from the top and from the bottom, and we can join them up to form some really strong support and resistance zones and just frame that chart so we can understand that behavior. So with GBP US dollar, we can see on Friday we had this pivot high and then we dropped with data on Friday morning from the US session. Previous to that though, we did have a test at this point on the Wednesday. So we can actually join all this up. We've got a lot of clustering here with these resistance, these attempts to break through, and then we've got this support here. So this forms a really strong support and resistance zone. We've got this pivot here, again, very, very strong. But look where we test coming in on Sunday night, Monday morning. We test from below this zone. So what we've got is we've got a bottom of the zone here, and I'm going to zoom in a little bit here. Where the body of this doji is here, that's a really good place to put that low of the zone. We get a couple of touches of there as well with this pivot, and then the top of the zone is, we're collecting a couple of pivots here and this pivot here. So again, strong zone. Through the night, we've had some support formed. Lots of tests of that support. So we've got this low of the zone here, and then we collect lots and lots of pivot points here. These the bottom of these doji candles really form good support. We do test that same low again and then push back up to test this support resistance zone to give us that range. Then we've broken out of that range because that's what we're looking for. We're looking for breaks out of that range. So this is the only indicator I've got on here at the moment is the xBrat manager, because I want to understand the breakout when it happens. So with the xBrat manager, we color in the candles. So if it's a red candle, for example, this one here, this candle is a down candle, but the previous candle was a down candle, but it's coloured in cyan because it had less volume than the previous candle. So it looks at the previous candle and gives a calculation where there's less or more volume. So you see here we get this red candle, then we get another red candle. So it's got even more volume than the previous candle breaking through. And this forms live. You see the current candle we have right now is a doji, and it's cyan because it's slightly less volume, because we're not far into this candle. The dots up above are higher than average volume. So what it does, it looks back over a set number of candles, compares that average volume, and then tells you whether that candle has higher or lower volume or just average volume. And you can see here, coming from down, we've got higher than average volume, but even more volume than the previous candle, higher than average volume, even more volume. That momentum, it's showing that behavior, that momentum breaking through. So that helps us make those decisions for those when we're breaking out of that range that's formed, when we're looking on lower time frames and we're using our xBratAlgo, for example. So we have the 3 and the 5 minute Heikin-Ashi charts, because the xBratAlgo works off Heikin-Ashi. We got 6-star sells both on both time frames here. So we have a 6-star sell at this point. We had a 1 here, but we don't short into support. We've got to make sure we've got an entry below that support and resistance zone. So I like to have multiple time frames. So I've looked at 15-minute, I've defined that range, I've framed the chart. I know as this is coming down, the momentum is building. I'm looking at the behavior from the manager, and in the description for this video you will see the link for the xBratAlgo and the manager together as a discounted bundle. And then we have so we've got a 6-star sell at this point. We're not going to sell into support. And so I'm just going to put a vertical line on there just to show you where that is and I'm going to transcribe it onto, so that's the 6-star short signal on the 3-minute. I'm just going to put that on the whole layout. So the next candle on the 5-minute, we get a 6-star sell getting towards that support. This is looking good. So I'm just going to go now to the 5-minute because we're going to use this signal. We're going to get some confirmation. So this is the 6-star sell signal here. We're not going to just press a button blindly. We need to say to ourselves, yes, this is good. Look at the manager, momentum's building, higher than average volume, higher than average volume. We are pushing through. So our entry needs to be below this support and resistance zone, okay? Put a green line for go. Okay, so this would be our entry. Now, as we're coming down into this support, we can see here on the BIAS Depth Heatmap. So this looks up 6 time frames. They're all red. There's a lot of bearish momentum here. So we've got a sensible entry. It's a good entry. We've got signal. We've got confirmation. We've framed our charts. We've done the hard work to say, you know what, if it breaks here, and then when we see in the candle moving down below, we've got increased volume, higher than average volume. We've got this momentum pushing down. This looks good. Okay. We've got multiple time frame strategies here with the 3 and the 5-minute. We're going to use the 5-minute to trade. We've got the signal, and that's our entry. Now, with the manager here, I've got it on day trading aggressive. Okay. These are the settings: aggressive, moderate, conservative. On the 5-minute, I want to be reasonably aggressive with this. So this helps us dictate to where the stop is. So at this, you see the ribbon here is part of the manager, and then turns green from green to red at this point. So we're going to manage this with the manager. As long as this ribbon remains red, we're going to stay in this trade. We're going to keep a reasonably loose stop. And what we're going to do is going to be above the signal candle and where that ribbon turns from green to red. That is our stop position right now. Okay, we're just going to let this run. The thing is, we understand behavior well with the manager. So at the moment we can see we're still getting down candles, but they are lowering in volume. Each candle has less volume than the previous candle because they're all cyan. They're lower than average volume. So what is most likely going to happen, and I haven't got a crystal ball, is that this will run out of juice. We'll have a pullback, test this, which was support, now act as resistance, then push back down again. So if I just draw this, if you like, here. So this is a scenario which looks like it's going to happen. We're going to push back up and probably test this support here. Let's change that to cyan, and we'll go solid with this. Okay, and then most likely we will then come back down. Okay, that's just a scenario that I'm seeing right now, unless we get some data come out and that, you know, that pushes it down fast and the volume starts to increase. We can see that happen. You know, like this example here where we started to decrease in volume and then we started to increase again, coming through, pushing through there. So we can look back a little further and we can see how that affects. So we can see here we've got 3 cyan candles coming down, starting to run out of juice. So each candle has less volume than the previous candle. We get that doji and then we start to push up again. Green, green, grey, which is an up candle but less volume, starting to run out of juice again, comes back down again. Cyan candle here. Again, we get that indecision doji and starts to push back up again off that support. So right now, we need to be hands off. We've got the trade on. We've done all the hard work. We've framed the chart on the 15-minute time frame. We've looked for a signal on the xBratAlgo for both the 3 and the 5-minute. We've taken the 5-minute signal, but we've been sensible with our entry below that support that's been overnight. You know, this should be obvious to all you traders. We've got the stop up here above the signal candle and where the manager ribbon turned from green to red. Now we're just waiting for price action to happen. We don't want to be too aggressive with the stop right now. We need to let this play out. And that's the most important thing here, is not to panic. There's some decent profit on this trade right now. But the idea of the manager is to stop you from getting out too early. Now, with this, when would we go risk-free? The idea would be to allow for a pullback, see where that pivot is, let it come back down. If this was a pullback from here, for example, and if we broke that pivot again, we can then start to adjust the stop. The ribbon is still red. It's still gathering distance from the top to the bottom here. So there's still a lot of bearish momentum. Our BIAS Depth Heatmap is all red. So we just got to sit on our hands and allow this thing to play out a little bit more. So hopefully that helps. Very, very simple method to frame your charts. Then we've got that xBratAlgo signals, looking at multiple time frames, choosing a sensible entry strategy, getting that confirmation from the BIAS Depth Heatmap, and I'll put the link in the video for that as well. And then we've got the entry. We then use the manager sensibly to manage this trade. Look, that candle's just turned red. So that's actually now got more volume than the previous candle. This is important now. Momentum seems to be building, continually building now to the downside. These were just two little, sort of candles that where there was less volume, but now all of a sudden we're starting to gather more momentum again. So, we just need to allow the manager to let us know and indicate that behavior. Hopefully that helps. Speak to you all really soon.